everybody, what is going on? It is Bill with Franklin Loan Center. I want to start just mixing in some topics here that are just covering some big mortgage myths that, I've been in the business for too close to 30 years now. And I've heard them through my entire career, and I'm just going to start picking some of these off one at a time. My first one, which is really relevant right now, is I'm going to wait for interest rates to fall before I jump into the market, right? And so there's lots of time in history that will prove that that is not the right way to go. But let's just look at like right now today and just look at some typical numbers, right? So I have loads of people, yes, rates are elevated still. And I have loads of people that are talking about just waiting for rates to come down. So here's something to consider, right? So the historical historical housing price increases here in Southern California, 4.5%. Like it's tried and true. It's been true for 40 years. So let's just apply that. I'm even going to be a little more conservative and just use 4%, right? So, because it does, on the surface, like, well, let's wait and see. It'll, bring my payment down, be more affordable, blah, blah, blah. But let's say, so today, let's say you can get $1 million house at, just pick a number, 6.5%, and you're waiting for 6%. And let's say you have to wait a year. So you buy today, and that total payment is going to be just about, call it $6,300, including taxes, insurance, everything, right? I'm assuming 20% down just to keep things really simple. So if you wait a year and prices elevate by another 4%, which shockingly through this entire rate increase, this elevated interest rate period, that's what we've been seeing, is at least 4% a year. Then if you wait until next year and do that, that house is now $1,040,000. But let's say you get a 6% interest rate. That's what you're waiting for, right? At 6%, guess what? Those payments are almost identical, right? And you're going to have to put, 20% of the $40,000, it's going to cost you another $8,000 up front. That you're going to have to spend on it, right? And then you're going to end up with the same payment. And hey, here's the good news about you buying before is now you can refinance and bring the payment even below where it would have started, right? So I just, and look, I think another part, so I'm just applying a 4% increase. What we've already seen, rates got down they were actually a hair below 6% on a normal conventional rate at the very beginning of this year. And we were already seeing things kind of take off. Then the whole thing in Iran happened, everything, and now we've seen rates elevate back up. But if those come back down, all these people that are sitting on the sidelines, they're all going to jump in the market. And what's that going to do? When you have more people looking for the same amount of houses for sale, that's going to drive prices up. Simple supply and demand, right? So I don't know if that happened anytime soon. Maybe we would see year over year 5, 6, 7%. Who knows, right? So look, nobody knows what's going to happen with the market definitively, but I just think the myth of I'm going to wait for interest rates to come down before I jump in the market, you might want to rethink that. So that's all I have today. I'm Bill. I'm with Franklin Loan Center, and I'll see you all next week.